Good afternoon, everyone. Welcome to this webinar on year-end payroll. And hopefully those of you that logged on a little early got to see the PowerPoint presentation. I didn't want to go through it in entirety because I'm trying to make this webinar stick within the 2-hour window. It may go over a few minutes. I'll just let you know in advance, but I think I've got it cut down enough that it'll be pretty close to the 2 hours. And so what I just want to point out a few things. Looks like we have about half of the people who are scheduled to attend logged on so far. So I want to talk for a couple more minutes to get as many people on as possible, but then I'm going to get moving so we can get through it. Just for any of you that might be new to webinars, on the right-hand side of your screen is a handouts button, and that's where all the documents for today's webinar can be found. If for some reason you have a problem downloading those, you can reach out to Shannon or Robin at those email addresses you see on the screen, and they can email them to you. We're going to pretty much go in the order of the documentation for the document that's called handout, so you should be able to follow along easily. Also, for those of you taking this for CPE credits, you'll have to answer at least 6 of the questions. I have 5 after the first hour, and then the rest after right around the 2nd hour mark. So as long as you're logged on for 2 hours and answer 6 questions, you'll get your full credits for the class. And then someone in marketing sends those out pretty quickly after the class is over. So with that, let me just go back and introduce myself. I'm Dawn Mihelic. I did present this class a year ago. That's pretty much what I still look like. And if any of you were attended that class last year, it's a lot the same. I mixed it up a little bit, but it's all things that you usually only do once a year. So it's always good to refresh your memory. So I'm going to go ahead and get started, and anybody who hasn't logged on yet, they'll just pick up when they get on. So let me go ahead and close this. Try to close it. Okay. Well, I know what's going on. Okie doke. Should be seeing foundation here. There we go. That's what I wanted to get to. All right, so what we're going to do today is I have this broken out into 4 segments of different tasks that you'll need to do over the next month or so. One, to prepare for producing W-2s, for actually producing the W-2s, and then other things that you want to do to get ready for the first payroll of the next year. So we'll start with, I pretty much laid it out in the order that I think you would perform these tasks. Some of them might be done a little bit out of order. So we're going to start with, if you look at the first page of your documentation, I have a checklist of all these tasks, and I made sure to keep them on one page, so if it's something you wanted to print out and check off, you'd be able to do that. Give me 1 second here. I'm not able to see what you're seeing, so I want to make sure that I have that availability. So in case something goes wrong here, I'm able to see it. All right, so we're going to start with reviewing the wage and tax report. This is the report that's kind of the guide for making sure that you have everything in order for producing W-2. So I'm going to show you how to use this and how to cross-check it with other information in Foundation, so you can be very confident that that everything's good. So we're going to run this wage and tax report. And I like to run it initially in summary format only. So that's going to give you totals for everybody. And then if I find discrepancies, I'll have to go back and run it in detail so I can see each person's information. And then for this purpose, I like to do current only as well. That way I'm not distracted by the current period and current quarter columns. So when we look at this report, it gives you pretty much everything. At the top, we have taxable and non-taxable wages. Then we have our different taxable wages and withholdings. And then we have our deductions separated between pre-tax and after-tax. And this is, grand total. So first thing I would do here is I would just make sure that everything is falling in line where it belongs. So at the top, we have a bunch of earnings that fall under these that are currently showing up as taxable, and then a couple of things that are showing up as non-taxable. And I'm a little bit confused why. I think my database, I thought I restored it, but it really shouldn't be showing this FICA that's showing here. So there may be a little problem when we are looking at data, but we'll get through it. And so anyways, the first thing you want to do is make sure that the taxable wages and non-taxable wages are where they belong. So, you'd review this. And in addition, you want to make sure that the taxable wages are taxable for the entities they should be. So in parentheses, you can see what entities they've been marked as taxable for. And so if you see any discrepancies here, you know that you have a problem that you're going to have to probably do history adjustments for. So if you'll give me a moment here, I do realize that my database didn't get restored. So give me just a second here so that I can get that done, because I do want to use the data that goes with the documentation. It will definitely make more sense, and this will go a lot more smoother if we do it that way. So you can see what I'm doing. There's no problem. I'm not giving away any secrets here. It's just that I swore I did this right before the class, and apparently I didn't. Okie doke, and we'll get back in, and we should be back in business. It's definitely not helping me keep this at 2 hours if I don't have this stuff set up right. Okie doke. So let's run that report again, and it should look better this time. Hide this. Okay, that's what I wanted it to look like. So, like I said, you're going to verify whether the taxes should be, or whether taxable earnings are falling in line where they should be. If they're not, where you can find the problem is on the earn code record. So we're going to go ahead and look at an earn code record, and we'll be looking at earn codes throughout this presentation today, because so much of the settings are on the earn code. And so you can see here, if you were to create a brand new earn code, your tax flags are over here on the right side. So you will be able, when you create a new earn code, you can enable or disable for each tax entity. And for ones that already exist and have already been used, you won't be able to change them. So if you do find out that something posted to earn code with the wrong tax settings, you'll have to do history adjustments, but you're also most likely going to have to create a new earn code with the correct settings to start using from this point forward, because the system won't let you change these taxable settings once an earn code's been used. So that's one place to look to see if there's any discrepancies. And if you want to see all your earn codes at once, just click list and then the list icon, then the list tab, and you can see all of them in one shot, and you can see their taxability or tax flags for each of the entities for all your earn codes. So take note if you find any discrepancies here, and then later on we'll talk about fixing history. And then there's another place that affects taxable earnings that often people forget about, and that's under the union deduction fringes, union/prevailing wage. So if you are a union company or do prevailing wage work and you have a pseudo table set up, there's two places that also drive whether fringes or deductions are taxable. So one of those is the deduction fringe master, and we can bring up any code here. And you can see that there's several tax and W-2 settings on the record. So if this is something that's supposed to appear on the W-2 as a retirement plan, you would want to have that checkbox enabled. There is your taxability flag. Now, if this is a deduction, the options are a little bit different, but a fringe can be either non-taxable, taxable for FICA only, or taxable for everything. And in this case, it's non-taxable. And then we can also add the fringe on the master record, tell the system where we want to report this on the W-2, and then code it accordingly. And then that's not it. You do set the taxability on the master code, but on the individual tables, there's also an override. So if you're trying to reconcile your state taxable, or actually any of your taxable earnings, and you're having trouble figuring out why they're not coming out right, it could be that there's an incorrect setting on one of these tables. So for instance, that pension we were looking at, it will default into the union deduction table with whatever setting is on that record. But if I change it, then the system will use this setting when calculating for this particular trade and union. So, again, if you're not reconciling, this may be the culprit. And if you want to look at all of these in one glance, again, you can click the list icon and the list tab, and you can scroll through and see if you see a setting that doesn't look right. And again, all we're doing right now is trying to identify problems that need to be fixed, and then also correct settings so that you don't keep having that same problem reoccur. And I did give you a separate handout that just contains the different maintenance items in Foundation that affect taxability. So you wouldn't have to scroll through the entire document to, find where those things are. I'd put it all in one place for you. So afterwards, it'll be a lot easier to work with. And then also on the wage and tax report, kind of the flip side of making sure your taxable items or non-taxable items are in the right place, we have your deductions. So at the bottom, we have pre-tax deductions and after-tax. If for some reason the 401k was in the after-tax and it shouldn't be, we would need to change some settings to fix that, and potentially some history. And where that gets determined is on the miscellaneous deduction code. So we'll go to Payroll Maintenance, Miscellaneous Deductions, and I'm going to bring up the HSA code so you can see how it's set. And what drives this is the plan type. When I click on the drop down, you'll see that we have several different plan types most of which have some sort of tax effect. And of course, other is just for deductions that have no tax implications. And again, you want to see all of your deduction codes and how they're set. Click on your list icon and your list tab, and in the plan type column, you'll see how these are set. Verify that they're set the way that you want them to. And keep in mind that they might be set correct now, but maybe sometime during the year they weren't. So you still could have discrepancies from, some time in the past that didn't get caught when you were doing your quarterly reports or such. So, but at least you want to make sure that as of right now, these are set the way they need to be. And then there's another piece to this that you'll find on page 8 of your documentation. I've given you the, cheat sheet, if you want to call it, that tells you how Foundation handles taxes for each of these plan types. And so that way you'll know if you select simple, it's going to reduce taxes for federal and state and so on. But you will also note that there's 3 different types of plans that will vary based on the state or local records. So I want to show you where those are, because those are also kind of not hidden, but sometimes you forget or don't even know that there's additional settings on those records that can affect your state taxable, SUTA taxable, and local taxable reporting. So for 401k, Section 125, and HSA, we have to look at the state and local tables to determine how Foundation is handling the taxes. So let's go to the state record first so I can show you where that's at. So under Payroll Maintenance, tax tables, we'll choose state, and we'll just bring up Ohio, very familiar to many of us. And then in the upper right-hand corner, you see this group box where we can tell the system whether to include the 401k, HSA, or Section 125 for the state taxable purposes. And then we have those same options on the SUTA tab right here. So you could have a scenario where for state tax purposes, you're allowed to deduct 401k, but for state unemployment purposes, you're not. So that's what this shows. I don't know if that's true for Ohio. I'm just using it as an example. If you do find that your state taxable or your local taxable just isn't coming out right, this could very well be the reason why. And then also we have the same settings similar on the local table, just the wording is the opposite. So if we bring up a local table, you can see that we have those same options, except on the local table, the wording is exclude from taxable earnings. So as long as you read it and set these up according to what it says, you'll be fine. And there's also some other things on a state record, like you can deduct FIT and FICA from gross taxable wages if that locality allows that. So again, there's a lot of settings here that can have an impact. But between all of those that I just showed you, you should be able to find any discrepancy in taxable wages. And then the other thing you want to do with this wage and tax report is you want to verify, again, these taxable wages for each entity. So for instance, for federal tax, if we take the gross taxable and we subtract the pre-tax deductions that are not taxable for federal purposes, which are these two, we should come up with the 43,86301, and we do. So we know we're good there. And then for FICA, for FICA, we have to know the rules there, which of these pre-tax deductions are taxable or not taxable for FICA purposes. Obviously, it's not the same because it's a little bit different amount. So you'll want to go through item by item and just verify that the correct taxable earnings are being shown on this report. if you find there's a discrepancy, that's where you'll need to go back and run this report in detail so that you can start looking at this on a person-by-person basis and look for the discrepancies. Or you might, if it's a FUTA problem, you might go and run the FUTA report and find out which employees have the problem, and then just come here and run this report for those employees. But that's one big task you want to do, just to make sure that everything is correct from this point forward. And then just make note of any adjustments that you'll need to make, and we'll talk about history adjustments a little later in the webinar. Next thing I want to talk about is ACA setup, ACA reporting, setup and reporting. So I gave you 2 handouts for this. That could be its own separate webinar, so we don't have time to go into any details on that. So I'm giving you documentation, and then I'm going to also point you to other resources that you have for this as we go along in the webinar. But I do want to show you the 2 places where the setup occurs, and then talk about what changed between last year and this year. So this will just take a few minutes, but as far as setup, there's 2 places. There's the control files and there's the employee record. So under system controls, under payroll, there is an ACA tab. And at the top is where you'll create your different measuring groups and your measuring periods. And that's all that goes on this screen. And then on the employee record, under payroll maintenance employees, there's 2 tabs. One tab is where you put in the details, and the other tab is where you tell it which what type of employee this is. So on the ACA 1095 tab, you're either filling out what type of coverage was offered, or if the employee was self-insured, and the whole bunch of options here. And if they had the same offerings all year, that goes in the 12 months column. If they had different offerings throughout the year, then you have to specify for each month which code is applicable. And I can't show you yet because our year-end update is not done yet, but there are 3 codes being added to this drop-down, and they are an offer to PT, a part-time employee, a employee zip, and a site zip. And that's all with this ICHR prefix. So if those are codes that you've been looking for, they will be available in the new update. And then on the ACA other tab is where you either mark the employee as exempt, or you specify which group they fall under. And that's as much as I'm going to go into as far as ACA reporting goes, but know that you have a lot of resources available to you when you get to doing that task. Okay, so now we're going to get into an actual process. So, and that's a common process, is producing bonus checks at year end. A lot of times that's something that employers want to do before the year is over, a lot of times right around Christmas. And normally that's no big deal. You enter a time card with an earn code, and with a special earn code that you created for that purpose. But what is unique to this time of year, or not this time of year, what's unique is that a lot of times if it's a large amount, it's going to really raise the amount withheld, because our system will annualize that and then use the table for that annualized amount, which could be a much higher bracket than what the employee normally has. And then this bonus check ends up being not as cool as it seems. So if you want to adjust, I have 2 different ways of showing you of how to adjust the taxes. And either one is fine. It's just one is probably better for volume. So we're going to first look at the earn code and what's unique about the earn code to pay a bonus. So we're going to go to earn codes, and I'm going to bring up my bonus earn code. And usually it's an additional type, meaning it's a lump sum. And usually it's taxable for all entities. But the one thing that you have to pay attention to is whether or not you need to set a GL expense account on this earn code. So if you are using departments to drive your general ledger postings for payroll, you probably have a provision for bonus wages on your department. And if you do, you can leave this field blank. If you don't, or if you have it on some of your departments but not all of your departments, then you will need to put a GL expense account here for those departments that don't have a bonus provision. If you leave it blank and there's no provision for it, you're going to get a compute error saying that your general ledger is out of balance. So you'll want to check your departments and see if you have specified how to post bonus wages or not. And then to pay the bonus, it's just a simple time card entry. And if there's those of you who don't do payroll, don't get too hung up on this part of things. We're just going to keep it real simple. But since we are going to come back to this a few times, you might actually learn a little bit about processing payroll. Okay, why is my tab key not working right? I feel like I'm going to have some struggles today. And we're going to give this employee a $10,000 bonus, which is more than they normally make. So it's going to generate higher tax than they usually would have. And then we're just going to compute it without changing any settings, just to see what it's going to calculate. A lot of times when you do bonus checks, you're not withholding any of the normal deductions. So I'm going to delete those. And then we'll see what comes up. So this is going to reduce the pay by a little over $3,000, mostly for federal and state. So I may want to adjust that down so this person gets a little bit more in their net pay. So how I do that, one way to do that is to do a current adjustment. And this is a perfectly fine way to do this if you have a couple. If you have to do 100 bonus checks, this is not going to be the most efficient way to do it. But it is a very easy way to do it. So we're going to go in here, you put in the employee's number, and at the bottom, we're just going to tell the system how much to adjust the withholding by. So for this example, I'm just going to take away all the federal and all the state. So the only thing that's being withheld is FICA. And of course, that might make this person unhappy come tax time, but that's what we're going to do for this example. And so now that I've entered this adjustment, I'm going to compute again. It's going to put the two time cards together and then give me a brand new net. And so now the employee would get a lot more in their paycheck. So very simple way to adjust the taxes on a check. But I'm going to show you a more efficient way in the event that you have more to do. So I'm going to purge the computed payroll, and I'm going to get rid of the current adjustment time card. But I'm going to keep the time card because we can use that again. We just need to make one change to it. And so the other way to affect the taxes is to use something called payment groups. And these payment groups are set up in the control files. So if we scroll down to controls, choose PR, and go to payment groups, here we've set up a few different payment groups. So payment group 1 is just our weekly normal payment group that defaults into the time card, and it defaults because we have it set as the default. And you can only have one set as the default. And then I have two different bonus ones set up. I have bonus 3, which I have set up to not withhold any deductions of any kind. So now I don't have to worry when I'm computing about those boxes. This will override that. And then also at the bottom, I'm telling it exactly what percentage to withhold. So I can either say, withhold normally, don't withhold at all, or withhold a certain amount. So I'm going to adjust this. I'm going to withhold something just so this person is not too much under withheld, but not as much as it calculated initially. And then you click OK to save. And then by doing this, everybody that you're entering time card using this payment group will have the same tax scenario. And then all I have to do to make this happen is go back to the time card, modify it, and then I just need to change the payment group from the default to payment group number 3. And I'm going to click OK, and then I am going to compute, and I see that I have a question posed, so I will get to that question as soon as I'm done with this computation. And again, I don't have to worry about these deduction fields because the payment group is going to override it. And now we have, you can see that exactly what I told it to withhold. 15% and 5% is what's going to happen here. So I'm going to go ahead and post this and then look at this question because it looks like it's an important question. And purge the time card when it prompts me to. Okay, so Alicia asked, isn't it unlawful to not withhold income taxes on bonus payments unless an employee provides a properly completed W-4 claiming exempt status? I don't know the answer to that question. If it is, then obviously you would definitely want to withhold something. I just don't know the answer. So if that is true, just, then make sure that you're withholding something. I know that you have to withhold FICA for sure, but I myself am not a CPA. I would call myself a senior bookkeeper, but not. I don't know the laws about that. So yes, if I say anything here that's not legal, definitely correct me or just ignore it. So, but thanks for asking that question because I definitely don't want to mislead anybody. Okay, and then I want to show you another bonus check, and the reason I'm showing you this one is every year I have to do this for a few clients, and so I thought if I have to do it, then it might be something that you guys have to do too, and that is produce a bonus check to cover the owner's federal taxes. And so you might get it posed 2 different ways. So you might get someone say, I need to withhold this much in taxes and, whatever, give me a check for, $200, whatever it ends up being, just so that I have this, show this tax withheld, so whatever the gross needs to be. Or they might actually say it has to be a 0 check that covers this amount of taxes. So I'm going to show you both at the same time, basically. So as far as the bonus earn code, you can use the same earn code that we used for the previous example. But where we're going to do something different is in the figuring out of the gross amount. So if you have a gross up calculator where you can plug in all the specifics, it's going to tell you exactly what that gross number needs to be. I don't happen to have one. Foundation doesn't provide one. So I just kind of use the trial and error method when I'm doing this. So I'm going to not show you every single step of that because that would be too time consuming, but just kind of show you the thought process there and what you have to go through. So for this one, I don't know if you noticed, but when we went to look at the payment groups, I had a bonus group 4, which was set to not withhold anything. And we're going to use that one for this example because we're going to override. We're going to specify exactly what we want to withhold. So I don't want the system doing any calculating. So we're going to first enter a time card for an approximate amount that we think will cover or come close to covering this withholding. So this employee is asking me to withhold 100,000, our client, 100,000 in federal tax. So I know that we're going to have 7650 in FICA tax. So I'm going to put in 108,000 to start with, see how that works out. Some of you may have a gross up calculator and already know the number. We'll get there too. I just want to show you how you would get to it if you didn't. And then we're going to enter a current adjustment to tell the system how much, you know what I didn't do? I didn't change the bonus. Hold on, we're going to go back and modify that. So we want to change the payment group to payment group 4. And then we're going to also enter a current adjustment for payment group 4, same employee. And we're going to tell the system to withhold 100,000. Big money. And then we're going to compute this and see what we get. And I don't have to worry about these deduction cycles. Those are already taken care of. And it says we're going to get a check that's less than 0, which we obviously can't have. And we'll see how much less than 0 that comes out to. And so it's 262 negative. So I'm going to go back and modify this amount by $300. And this is kind of how I would go, you know, about trial and error. It's how I did go about trial and error. And if anybody has a good source for a gross up calculator, when I go online to get one for free, it always says, you know, this may harm your computer. So I just kind of shy away from that. So if you have a good source, go ahead and pose it as a question and I'll share it with everybody. Compute. And now we should end up with a check for $15.05. So in the example where the client is just saying, you know, whatever it comes out to, as long as I get the 100,000 withheld, this is good enough. We could go ahead and post this check and be done with it. But if they truly, truly want it to be a 0 check, then we need to figure out the exact amount. And so without going back and forth and putting you through that, I'm just going to enter the number that I worked out. It probably took me about 5 tries to get to the exact number. But that exact number is 108,283.70. And we'll compute, and we get exactly what they asked for. 100,000 withheld, 0 check, and we can go ahead and post a 0 check. And I'm going to purge the time card. All right, so pretty much should cover you for any type of bonus checks that you might want to produce. All right, so we are now done with the first segment already. That's pretty good. So I'm going to move on into the second segment, which is going to be task to be completed before the first payday of 2022. So this is going to be just making sure that any setting changes that need to happen between the last pay of the year and the first pay of the year get done so that the first pay of the year is accurate. Obviously, if you don't get it done, then you might need to do some history adjustments in the new year. But ideally, you can have all this stuff done beforehand. So, you know, typically with weekly payrolls, it doesn't give you a lot of time, but you know, but if you can, great. All right, so one thing we want to do is we want to look at the employee record to see is there anything that needs to change on the employee record. And so we're going to modify. I'm pretty much using the same 2 or 3 employees throughout today's presentation. So typically address and that information doesn't change on the new year unless the person just happened to move at that time. But things like salary or hourly rate possibly could change at the beginning of the year. So if your employee's a union employee and you're not paying them more than their union rate, you don't have to make any changes on the record. The union setup rate tables will automatically give them increases as those dates come. But if they're a salaried employee or a hourly employee that's not union, you would change their record to reflect new pay rates. So let's say she was getting an increase of $200. We'd enter that there, and immediately the history tab gets updated. But what I might want to do here is just change the take effect date to January 1st, 22, just for record keeping purposes. But that will, if I don't have a recurring time card set up for this person, this is the rate that will pop into the time card. But if I do have a recurring time card, I can't stop here. I also have to update the rate here. You can see that the system doesn't automatically update this when you update the general tab. So if I don't change this, when I go to generate time cards for this person, it's still going to pull in 1,000. So if you've ever seen that happen, that's because it has to be changed here as well. For hourly people, this doesn't apply because you're typically not setting them up as recurring unless they get 40 hours regularly. So I guess it could happen for an hourly person as well. So you want to make sure that that is updated properly. And then the other place where you might have to update records is on the deductions tab. So a couple of things here. You might, sometimes this is the time of year when people change their exemptions or their statuses, and depending on whether their information has been entered on the old W-4 or the new W-4, we accommodate both. But at the top, here's where federal gets updated, and here's where state and local gets updated. So you would make whatever setting changes you need. And then if the employee has any deductions where the amounts are changing, like insurance rates are going up, or maybe in this case, we'll say this person didn't have anything deducted, but now she's going to have 401k withheld. You would add that information to the record, and maybe she's going to have 10% withheld. And normally you don't have to put in effective date unless you don't want this to take effect on the next paycheck. If you leave it blank, it'll take effect on the very next paycheck. If you want it to take effect somewhere down the road, then you would put in that effective date, and then it'll start on that date. Now, you can't do that with insurances. Like, you can't say this is the effective date and then pick the same insurance code and say on January 1st it goes up to this. It doesn't let you have the same code on the same record. So you just have to wait till last pay of the year is done and then update your rates. And I know if you have 300 employees, this is quite a task because you have to come in here and manually update them. So what I would recommend, if you have that sort of numbers of employees, we probably could have a consultant script in those changes. It would probably cost something, but in what you would save time-wise, it probably is worth it. But if you have 50 employees and 10 of them are changing the rates, just manually changing that information shouldn't be a big deal. And the last thing that I think is potential, usually direct deposit, they don't change at this time of year. But the last thing that I think there's a potential to have to update on an employee's record is anything to do with time off accruals. So obviously, if you haven't set that up or you don't plan on setting that up, this isn't going to pertain to you. But maybe it's something you've been thinking about, and so just paying attention will at least give you some information on that. So, for instance, this person we do have a time off accrual set up on this database. And this person is currently accruing 120 hours a year. There's all different ways to set this up, whether you dump in all the hours at the beginning of the year, dump in all the hours on the employee's anniversary date, or divide the hours by however many weeks they get paid and give them so much a week or so much a pay. There's all kinds of ways to set this up. In this database, we're just dumping in all the hours at the beginning of the calendar year for that person. And so with that being the case, we have to take a look and see, do any changes or updates need to be made for the year ahead? So this person's currently accruing under the 4 to 5 year plan, which is the last plan that was set up. But this company's going to add a new level this year for employees that have been there 10 years or more, and she has. So we're going to need to create that new code and then come back to her record and add it to her record. So I'm going to save her record and come back because I know I'm going to have to refresh the data. So what I'm going to show you where these accrual codes are. So they're under payroll maintenance, and we have we're using this PTO one for this purpose. And especially if you set this up a while ago and haven't really paid attention a while, it's real easy to forget how this all works. So we're going to add a row, but first we're going to modify the plan 4, because now it used to be a limited plan, and now we're going to make it be, it used to be unlimited, and now we're going to make it be a limited plan. So we're going to make this one be 5 to 10 years, and instead of being unlimited, this one only lasts for 60 months. And then this new plan is going to be for 10 years or more, and this is going to be our new unlimited plan, meaning that there's no plan past this one. And so we're going to make it match the rest. Per pay is just meaning that very first pay of the year, it's going to dump in all the hours, and then we're going to limit the amount that can be carried to the annual limit. This one happens to renew on the calendar date. And then in this company, they also do zero balance. So that means whatever's not used at the end of the year gets zeroed out. But I want to make a point of saying, in case this is your first year going through this, if you have zero balance or limits to how much gets carried over, you're not going to see that adjustment until you post your first payroll of the next year. So you can't, at the end of the year, you don't want to look at reports and say, oh, I need to make these adjustments. You have to wait till you've done your first payroll of the next year, then go back and see, do any adjustments need to be made? And you can make them to whatever date you want to. But anyways, we've added a brand new plan to this code. And now I just know from experience that I need to refresh the data on this one. There's not too many places where we have to do that, but this happens to be one. And we're going to bring that employee's record back, and we're going to modify her accrual tab. So this one is no longer going to be active. So what we want to do here is disable it. If we don't, there is the chance that the system will accrue that one and the new one, because it doesn't know on her record that this one should be limited. So just always play it safe by disabling the plans that are no longer are active. And then we're going to pick this new plan. And then you always want to set the effective date, because the system will default in the employee's start date, which is hardly ever the effective date of a plan. So you always want to make sure you set that. And ideally, when you set up a new employee, you could set up all of their plans right from day one with the effective dates and never look at it again, because when that date comes, it'll stop accruing the old plan if you have the correct plan duration in there, and it'll start accruing the new one, and then it'll work itself. The only downside is if you decide to change up your parameters and you've done all this setup, then it was all for naught. So, you know, if you just set them up with the plan they're currently in, you do have to go back every year and see, is anybody moving up a level, and do I need to add that to the record? So in this case, if we have any other employees that have been there 10 years or more, we need to go update their records and put this plan 5 so that it accrues properly. But the nice thing about this time off accrual is if you get it set up right, it works like a dream. If you have some problems in the initial setup, or something didn't go right, it's so easy to make corrections and get it back on track. So I want to show you that in the event that you would need to do that. So I'm just going to use this one person as an example. So there's 2 reports. It's very simple. There's 2 reports to show you where you stand with time off. And so the summary report doesn't tell you like what plan, but it just tells you in total what this person has. So we're going to use this person as an example that has negative hours, and we're just going to set him to 0 manually. If we allow the system to do the zeroing out, it would do it for us on the first pay of the year, but just for demonstration purposes, we're going to do it manually. But I need to know what plan this pertains to. So the only way I can find that out is on the report next to it, the detail report. So we'll rerun this for just this employee so I can find out what plan, and his negative 8 hours are attributable to plan 4. So that's the one I want to adjust. So if I go to payroll daily, log accrued time, I'm always going to be in modify mode. Once you set someone up, there'll be a record for them here, at least one record. And so we'll look and we'll find the one that is plan 4 for this employee. And we're going to add an adjustment, and we're going to add 8 hours to bring them back to 0, or just to actual, we'll say. Or, you might know that someone took vacation, but it didn't get recorded as vacation. So this is a way that you could, edit their time off manually to get them back where they belong. Or maybe you didn't start accruing the first couple weeks, and you want to get caught up. You can use this for that. And sometimes you need to enable this checkbox. In this case, we don't. And then there's no listing and posting here. It's just an automatic update when you make that entry. Let's see, we want to go back to that report. Not here. Payroll reports. Payroll is such a busy menu. Sometimes it's hard to find what you're looking for. And let's just pick this particular guy. And now you can see that we've audited his balance to 800. To 0. And then also on the employee's record, there's on the accrual tab, you may have noticed it on the other employee, there's the history of every transaction that's ever been made is there. So you can always look at that to see what has gone on. So that's all I have to say about accrued time, but it is something that sometimes needs to be dealt with at this time of year. Okay, now we're going to switch gears and we're going to talk about tax tables. And I know it sounds like I'm just moving right along, but if I don't, we're going to be here for an extra hour, and sure none of you want to add an hour to this. Next thing we're going to talk about is tax tables. So typically, Foundation is going to do your updating of tax tables for you for any that already exist, with the exception of the SUTA rate. We obviously everybody has a different SUTA rate, so we can't update those for you. But there may be times when you need to manually update a tax table, and so I just want to show you where you can find the information, and also where that gets entered if you ever have to. I recommend that if you can hold off. And what could happen to make you have to do it manually is couple of things. So maybe you have a new state that you're going to be working in, wasn't already set up in Foundation. So Foundation won't update that table since it wasn't there. So you might have to, for the first time, set it up manually. You may have where Foundation has the record of what the taxes should be, but it hasn't gotten into an update yet, and so you can't update it, but you can manually enter it. So those are a couple things that happen. Sometimes they're a little bit late in January, and it has to do with either the states getting them to Foundation late or Foundation wanting to accumulate 4 or 5 before they put out a new update. So if you're ever in that situation where you just absolutely have to have the most current table and you can't wait, then you would do it manually. But in the meantime, the system will keep withholding at last year's rate, so you'll still be withholding something. So it's not, it's not terrible if you go 2 or 3 weeks into the new year with the old rate. At least in my opinion, that might not be your opinion. So first, I'm going to take us out to the website and show you where you can access the tax table information. And also while I'm there, I'm going to show you other resources, which I have detailed at the end of this webinar. So instead of revisiting this twice, I'm going to show it to you now and then not talk about it at the end of the webinar. Just let you have the documentation. Okay, Foundation. I have to type this properly for this to work. Okay, so you will click on the Clients button up here, button menu. I have my user ID and password locked in, so it takes me directly here. But or when I click Client Portal, it takes me directly here. If you haven't locked yours in, you'll need to know your login password and ID and password, which is different than the password you use to log into Foundation. It's a separate company login, and so if you don't have that or can't remember it, just contact support and they'll help you out with that. When you get here, there's all kinds of resources for people that have the client login. So you saw right away ACA popped up. We have a button here or a section for year end. When you click on that, there's a whole menu of year end specific topics. So you will definitely find information about everything we talk about today, including the ACA stuff and more. There's also videos on certain topics, all kinds of information here. Even how to update Foundation if you're not a hosted client. And then, but for this purpose of finding your tax tables, you're going to find that under Resources, Tax Tables. And of course, right now, everything's for 2021. We don't have any of the 22 tables uploaded yet. But once we do, you'll have a banner here that says 2022. And as we get the information, each state will be listed here in blue. Until we get it, they'll be grayed out. And then at the bottom, you see federal tax tables. They're still also 2021. Once those come in, you'll have the 2022 tables. And then all the history for the states for several years is here too, if you need it. But just to show you what these look like, if you click on a state record, it's going to give you a PDF showing you exactly what needs to be entered into the screens and how, and it tells you all the details, whether something has to go on the exemptions tab or doesn't, and what that is. So very helpful. It's just tedious to have to do the entry, but we provide you all the guidance you need on these to actually do that. And so if we go back to Foundation to update the federal table, everything's going to be under Payroll Maintenance Tax Tables. You would modify this. And while we're here, I also want to mention that you should verify your tax ID numbers, especially as this is your first year on Foundation. Sometimes when you're going through the implementation process, you leave this information out because there's too much stuff going on. And if you don't remember to come back and update that information. When you go to do your W-2s, it's going to be incorrect. So while you're here, you might as well take a look at those as well. But you would, for federal, go to the brackets tab. At the top, you'll add a row. Right-click with your mouse. Probably already know that. And put in the new start date. And up until, you put in a later date, Foundation will always use the latest date that it has. And then as soon as you put in a more recent date, it will use that. So something I've seen happen is where someone will add the new row, but not put any of the data in. And then no taxes will be calculated because the system says, well, this is the new date, and this is what I got. So if you do add a row, make sure you add the data that goes with it. So you put in all your data for this row, and then each individual box, I believe for the federal, is about 7 lines. So again, it's a lot of data entry. So if you can wait for the update, it's much better to wait for the update. And then on the state tables, they're very similar. They're just, different because states are different. You would right-click, add a line, same thing, put your date in, and then if something needs to go into the exemptions tab, it would go here, and then your rates and other things go on this tab. And again, you have state ID number on the general tab and a place for a SUTA ID number on the SUTA tab in the event that those are different or that you need them to appear on those different reports. You want to make sure they're here. And then we also have some place for this. We have 3 local entry screens, and the quick entry will accommodate most people, but if you have a more complicated local table, this local will give you places for exemptions, and the local fixed is only if you have fixed amount or an employer portion. So you'll know which one you have to use. If the local quick does not accommodate, go to the local. If that does not accommodate, go to the local fixed. But with the locals, we don't update these. We don't do anything. We don't keep track of what the local rates are. So you're on your own to populate these and keep these maintained. And a lot of times the locals don't change every year, or they might not even change on January 1st. It might be mid-year. But when you do need to change them, it's very similar to the others. You just add a line, opens up the line, and then there's a spot for you to put in the rates, exemption information if that's relevant. So you want to make sure that those are good to go for 2022. And one last thing before we stop for some poll questions, and that is to change your control date ranges. And those are found under System at the bottom of your menu, Controls. And we have these for every single module, but I'm going to specifically talk about payroll since that's what this topic is on today. And so when it comes to before you go to do your first payroll for 2022, you're going to want to change this. And you can keep it closer. You can make it a quarter if you want. But as long as you're at least allowing yourself to enter, for the month of January, you'll be good. But at this point, I would probably change it to Warn because you're probably still going to need to do some history adjustments for 2021. And you'll get a warning. It'll say, you're outside of the control date range. You want to proceed. And you can choose to proceed or not. And then when you're all done with your history adjustments in 2021, you can change this back to Prevent just to make sure nothing accidentally gets posted outside of the year it's supposed to. All right, so that's everything that I thought was worth mentioning as far as getting ready for your next year's payroll. We're going to take a break. We're right about that 1 hour mark, so pretty good on time. And I'm going to launch a few questions or polls, as they call them here. So I've got 5. I usually will allow a minute for each. So if you're not answering questions, you can take a 5-minute break and not miss anything. So let me launch the first one. I'm not going to read these out loud. I'm just going to let you answer. And then after about a minute, I'm going to share them with the group. Okay, in about 5 seconds, I'm going to close this one out. And share. And the correct answer was all of the above. So even if you answered A, B, or C, you're correct, but they're all correct. All right. Now I'm going to go on to the next one. And give you about a minute, although it shouldn't take a minute. Okay, I'm getting ready to close this one out. And most of you got this one too. It is true. And if I didn't say it, I know it was in your documentation, but you know, changing a setting will make things show up on the reports where they belong, but any history that posted with incorrect settings most likely will need to get adjusted. All right. And next one. There we go. Okay, getting ready to close this one out. And so this one, the answer is payment group settings. So most of you got that. You can make some, a current adjustment to change the withholdings, but to do it in advance so that you don't have to manually adjust it, it is the payment group settings. So, all right, we have 2 more questions in this segment, and let's see. Okay, this one should be easy, but it might be a little tricky. All right, getting ready to close out. And most of you got this one right. Again, it is the employee deduction tab where those are changed. And we have one more in this segment. And similar but different. Okay, I'm about to close this one out. And the answer is the state tax table. I tricked a couple of you on that one. Not that I meant to. Okay, so let's get back to the webinar. All right, so we're in the third segment now, and these are tasks to be completed before printing W-2. So you get a little bit more time for this because I think the deadline is January 31st, unless that falls on a weekend. But still something that you have to start, getting ready for. So in the previous tasks, those were all about finding problems that may have occurred this year that have to be cleaned up before producing your W-2s. And then this segment is more about those little odds and ends types of adjustments that you might need to make for just a variety of things. As well as just, final previewing of data. So we're going to first start off with how to record officer paid insurance. So we're going to look at the earn code that we would use to do that. And so I think I have 3 things I'm going to show you in a row that are all examples of non-monetary fringes, but have to be done a little bit differently just because of the requirements. And this is just more of just a comment. Most of your adjustments can be made with the Adjustment Genie, but there's just certain things that are not handled properly with the Adjustment Genie. And so those are the things that we might have to do a history adjustment instead, or we might have to do a time card that's computed as a history adjustment. There is no extensive list of these things get done here, these things get done here. You kind of have to just, take each thing on a case-by-case basis and determine how to do it. And that's where you can contact support and say, I need to do this. They might have a PDF they can send you, or they might say, oh yeah, you can use the Adjustment Genie for that. But this particular one, I believe we're using a time card for. So first, I'm going to go to earn codes under Payroll Maintenance. Like I said, we're going to be here a lot today. And we set up an earn code for this. And what makes it unique is that it's a non-monetary fringe, which means we're not giving someone money in their paycheck. We're just adjusting their taxable earnings. And so for this one, we're debiting and crediting the same GL account because we don't want to affect the GL. And this one also, we're saying is taxable just for federal. Now, again, I'm not sure if that's accurate or not. That's just, what this example shows. And then the other thing on the earn code that's important is the W-2 tab. You want to tell the system where to report this. So you have various options, and of course you want to choose the one that's accurate for this type. And then you have what you want that code to be, and then you can even spell out a description. I'm just going to leave that blank for now. It's not that important for this demonstration. And then for this particular type of adjustment, we're actually going to enter a time card, which is kind of unusual. Usually you don't use a time card for an adjustment, but for this one you do. And so let's see, what employee am I working with here? 1,000. Okay. And of course, these dates, I don't think I mentioned at the beginning, but we're using 2020 dates. My database, I didn't have any current data in my database, and I didn't want to go through the process of creating all this current data. So we're using last year's dates, but it's all still relevant. And we're going to record $6,600 in officer's insurance. And before we had the Adjustment Genie, a lot of the adjustments had to be done this way. But the Adjustment Genie really improved, made making adjustments a lot easier, but we still have some weird ones that you have to do old school way. So when we compute this, what's different about this is we're going to remove the deduction codes like we have for some of these, and we're going to select this positive. And all this is doing is telling the system this is an adjustment, not a paycheck. And then we can look at the pre-check register if we want to. It's just saying that we're increasing the employee's total taxable wages and showing these earnings as a fringe. And I'm going to go ahead. You know what? I think I messed up here. Nope, I did fine. All right, so I'm going to go ahead and post this as an adjustment. And you just want to use what we recommend as far as the post date. Weekend date has no relevance, but what we recommend is if you use your last check date of the year. And that way, the in-between dates, in case when you go to do next year, if you have to use a date in this year as far as gathering, there's no overlap. So, but it really doesn't matter as long as it's 2021, you're fine. All right, so I do have a question I want to answer from Celeste. It says, if you have this earn code and entry on every paycheck throughout the year, you don't need to do this. Correct. It's kind of like the auto fringe. You could set up an amount as a recurring payment each pay and have this handled all throughout the year, and then you don't have to make this adjustment. So yeah, I recommend that. The only downside is, I guess there's really no downside to doing it, unless, the person doesn't work 1 week or something, but, or if you need it to be a certain amount for the year and then they leave halfway through, I'm not sure, I guess you do an adjustment then, but yeah, that definitely can be done that way too. Any of these things that are one-time only things, you could set up as recurring, or they usually do at the year end. And so I'm not going to show you on screen to save time, but after posting this, I do have in your documentation how this updates the wage and tax report. It's going to show it up under taxable wages, and I also have a print screen of how it would show up on your W-2 based on the settings that you put on the earn code. So those settings really have an impact on how things show up. So if they don't show up where you want, just go change the setting and then rerun it, and it will be where you want it. Okay, so the next one is a very common one. Again, this one is for the use of a company car, and we already talked about your ability to set that up as a recurring amount each pay. I have one client that has me do this every year, and he has me split it into 3 toward the end of the year so the taxes don't affect the paychecks that much. And I keep trying to get him to spread it out over the year, but we haven't gotten there yet. So there's a couple things that can happen. A lot of times you don't think about this until after the last paycheck. Obviously, if you think about it before the last paycheck, you can take care of it, you can withhold properly, and it's done. But if you haven't taken care of it before the last paycheck and there has to be withholding, you can't take money from nothing. So we have two ways of handling it. The one I gave you documentation for, I'm not going to demonstrate, is if the employer is going to pay those taxes on the employee's behalf. So I give you a handout that will explain how to record that. And then the one I'm going to show you is we'll make it look like we withheld the money in 2021, and we'll set up a deduction that'll be triggered in 2022 to get the money back from the employee, whether it's over one paycheck or multiple paychecks. So that's what I'm going to demonstrate. I think that happens more often than the other scenario. And again, if you're talking lots of employees and lots of money, the employer's probably not going to want to eat it. So I would think this is more common, but I don't know for sure. All right, so we're going to start again with an earn code. And I may have misspoke before. I think the earn code we used before was insurance earn code or something else. But now we're going to look at an auto fringe. And there's nothing much different here. It's non-monetary. We're debiting and crediting the same GL, but this one we deem to be taxable. And of course, you could pick and choose which taxes. Now, you can choose not to withhold, but the person is still going to be liable for those taxes. So in this example, we are withholding so that they will appear to have paid the right amount of taxes in 2021. Again, I don't know the legality of that. I just know how to make it happen. I'm assuming it's legal, but just showing you how to do it. And then on the W-2 tab, again, you would specify where you want it to appear and what you want it to be called. Kind of repetitive here, but they say you learn from repetition, so we'll see. Okay, so the other thing that you need to have here is a deduction code to set up that deduction for next year. Now, most of you should have something like this set up. If you don't, it may be that you deleted it because I believe it's part of the install set because we need it for making payroll corrections for prior periods and such. So if you don't see it, try to undelete it, try to modify it and see if it's been deleted and undelete it, or create one if you don't see a code like this under your miscellaneous deductions. And then in your control file, you have to specify what code you're using for this purpose. So under payroll and miscellaneous, over here on the left, we're telling it to use that code for correction. So just want to verify that all that's in line. And then this time, the first time today, we're going to be using the Adjustment Genie, which, as I said, is probably the thing you'll use the most for all these processes. And so what we're going to do here is we are going to put in the entire year. We're adjusting history for this year. We're going to select, this is what I want to use, I want to make sure. I know somewhere along the line I have to use a different employee number. I guess this is not that time. Okay, and then we're going to make an adjustment to earnings and miscellaneous deductions. And so we're going to go on, and on the first screen is where all the earnings are, and we do need to update the screen for the amount of auto fringe. So we're going to use that earn code, and over here we're going to enter what it should be, and the system's going to calculate the adjustment that needs to be entered. And we want to keep track of this net adjustment figure here because that can't change. It will change temporarily, but when we finish this adjustment, this needs to stay 5,000 because we can't change history. We can't. The net adjustment needs to net out to zero because the year's already done. We can't mess with history. So next thing we want to do is take note of the withholdings that we need to do. So we see that this would generate $310 for Social Security, $72.50 for Medicare. It's not going to calculate a federal tax, but we might want to withhold some federal tax so this person's not under withheld. So you can manually adjust that. And then on the state table, there's $639 in tax, and then another $40 that's going to be withheld for local. So the easiest way to figure out the total of what we have to adjust is to take the $5,000 that the adjustment needed to be minus this figure that you see here, and that's the amount we need to adjust this by to post this and then to set up that deduction for 2022. So that comes out to be $1,561.53. What we're going to do is we're going to go back to the Miscellaneous Deductions tab, and we're going to add that correction code. And this seems like backwards logic, but what we have to do here is actually deduct it, because if we allow it to calculate these withholdings, it actually would trigger a negative posting, and we can't have that. So we have to take it away to keep this at 0, and you see that the net adjustment goes back to what it should, and then it just pushes this into the new year. So we're going to go ahead and go forward, and the final screen, you can review all these numbers, make sure they sound right. But this is important, that total deductions ends up being 0, and that our total net is for the amount that we wanted to adjust by. I'm going to click finish, and this is going to trigger us to compute, and it already has the compute flags the way they need to be. And then we can look at the pre-check register just to see what it's showing. And so it's going to make it look as if this money was withheld in 2021. And then it's setting up this deduction to be taken in 2022. And we'll go ahead and post this adjustment. And again, if this is, it might be a little like you see this figure and you might say, oh, I don't know, what if this guy quits on me? I can't get that money back. So you kind of know whether this employee is going to be around to get the money back from or not. And if not, then, I don't know exactly how you handle it, but you still need to get the adjustment posted. So maybe that's where you record it as the employer covering the taxes, and then set up some other sort of loan or something for the employee. So once this is posted, again, it'll affect your wage and tax report appropriately, and it will affect the W-2s appropriately. But what I want to show you here is what happens when we go to pay this person the next time. And it's also in your documentation, but I want to show you on the screen as well. So we'll just give him his normal paycheck that he would get. This is $1,000, right? Got to make sure I get the right employer, else it's not going to work out. And let's say this is what he normally gets. And the system's not going to let you forget about it. So right away it tells you, oh, this person owes you. Do you want to take it now? Well, maybe I want to take it all. Maybe he's not going to net that much, so maybe I'll take $500 right now. And then it'll keep track of how much he still owes, and it'll keep reminding me until it's all paid off. And then I can go ahead and process. But I am going to close out of here and purge computed and purge that time card. Otherwise, it'll come back to haunt me. I don't want that. Okay, so I'm going to throw something and kind of take a big left turn here, just because I wanted to mention this kind of like an oddball thing that is worth mentioning. So last year, I believe it was called the CARES Act, but it was to report monies that you paid to employees that took off time for COVID, whether it was for their own sickness or for, family member sickness. And we had to do some programming and set up some earn codes so that you could properly report that. So since then, and I don't know exactly when these changes took place, but since last year, it's no longer the CARES Act, but it's the FFCRA or the ARPA. And so we have made the necessary edits to the earn code to be able to report that properly. So I just want to show you where that is so you're aware of it without showing you, anything about how to do this, but just so you know. So on the earn codes, I'm going to bring up one of the ones that we have created for that purpose. And on the wage tab, bottom right corner, is where you will specify what type of earning this is. So we have 4 options. This one was paid sick leave under the FFCRA. And if you report the hours, if you have reported the time all along this year under these earn codes, then I believe it shows up on the 941 report. So you may already be doing this and may already be aware of it. Or maybe you haven't done it, but you do have records of when this was paid and you want to report it. You could actually set these up, do some history adjustments to move the earnings out of whatever earn code you use, regular or whatever, into these earn codes so that you could, report these type of wages properly. So, that's just a possibility. So I just wanted to let you know that those changes were there. Oh, and I forgot to tell you this part. I often forget to show you the W-2 tab, and then of course there's a place here to tell the system how to report that on the W-2. Okie doke. Now we're going to go into another one of those special type adjustments that you may or may not have to make. And this is one of those, I don't know about you, but, I don't actually do this work for the most part. I just have to know how to do it. And from year to year, I forget all of this. I always need a refresher on how to do these things, even if I do them every single year. So I'm assuming that it is helpful information. So for third-party sick pay, it's just reporting pay that a third party paid to your employees, and we need to show the taxable income and withholding for W-2 purposes. So once again, we need an earn code for this. So we'll bring that up and go over it. Now, this doesn't mean that this is, let me just say this. It is a non-monetary fringe, debiting and crediting the same GL account. We're marking it as non-taxable for the purposes of making this adjustment. Doesn't mean it's not taxable. It's just how it needs to be set up to do the adjustment properly. And then on the W-2 tab, we're specifying that it's 941 sick pay. And anytime you don't have taxes specified, the system's always going to warn you and say, are you sure this isn't taxable? And then we are going to, now this time, we're doing 2 history adjustments. And the reason is the Adjustment Genie will not, because of the way that the math works and forces the FICA to be calculated, you can't get what you need with the history adjustment. So you have to use what I call old school way of doing things, the history adjustment, the true history adjustment. So we're going to go to enter history adjustments, and we have to do 2 different ones. We can't even do it as one history adjustment. It doesn't work right. So we have to do 2, but it's pretty simple. Having the instructions in front of you really helps. Trying to remember it doesn't work too well. So on this first one, we're really handling the employer side of things. So we're putting in the employer's match. We're putting in what wages this pertains to. And then at the bottom of the screen, we're specifying how much federal tax should be changed by. And then we have to check this first, or enable this first checkbox, third-party sick pay, wage, and FICA adjustment. And then we have one more thing we have to do on this record. On the earnings tab, that's where that earn code comes into play. And we're going to specify the FICA amount that really kind of shows up as a fringe that's paid to the employee to cover the FICA. It's really kind of how it looks in the reports. And so we're going to go ahead and compute this one. And this time, there's one slight change to how we compute. So last time, we just, it was a time card, and we selected the positive button, but this time we actually have to also specify that it's a history adjustment. And pre-check register doesn't really, it's not that helpful, but it's basically saying that the $76.50 is a fringe, the $1,000 is increasing taxable income for the employee. And then we're going to go ahead and post this adjustment just like all the other ones. And then the system will prompt us to purge it. And then we're going to do one more history adjustment for this. And this one's an easy one, and this covers the employee side of things. And we're going to put in the amount of FICA, Medicare that should have been withheld, and also select this bottom checkbox, the third-party sick pay withholding. And that's all that gets entered on the second one. And we'll compute, same settings. But when we post, we're going to do something slightly different. And then this is just showing you, you know, making it look as if the FICA was withheld, you know, for W-2 purposes. And then when we post, we'll do, this is the only one we do differently. We're going to put the date in, but this one we're going to bypass the GL. If we don't, it's going to throw off your general ledger. So slightly different. And that's why you almost have to have, for each of these type of adjustments, you just have to get the PDF and just follow it, because it's just too hard to remember all these little details. And then I'm not going to display it on screen, but in your documentation, I have a example of the 941 after posting this adjustment, showing the current adjustment for sick pay on the form. And then I also have a print screen of the W-2 showing that, you know, for the FICA taxable amount, the correct FICA was withheld. So everything looks right. And then, you know, to finalize before you're going to produce your W-2s, this is where you would gather all the, you know, corrections you found that need to be made and have an idea. So most of the stuff we talked about so far was specific type adjustments for specific purposes. But the history adjustments that are to fix history that got posted incorrectly, that's what we're about to talk about now. And those will all be done using the Adjustment Genie. And it's pretty, Adjustment Genie will try to fix everything for you as you go through it. So where it knows a figure is off, it automatically tells you what it thinks it should be. So it kind of helps you along. But what I'm going to do here is I'm going to run the wage and tax report for a particular employee and show you the problem that we found, and then show you how to fix it. So this is going to be employee 1007, and I probably should have just shown it to you in current only mode. And so what we found looking at his data is that he had duplicate state tax withholding and should not have had this North Carolina withholding. And so, or I should say North Carolina taxable. Now, in your documentation, it shows an amount withheld as well, and I don't know what I did to make that disappear, so we don't have to deal with it. The example in your book shows how we can give that money back to him in 2022, so we can bypass that part of it and just deal with the taxable wages that should not have been entered for North Carolina. So that's what we're trying to fix. We're going to go to Payroll Daily Adjustment Genie, put in the date, the whole year date range, put in the employee. And I would have normally picked the earnings and the miscellaneous deductions to set up that correction to pay him back. But since it looks like we don't have to do that, I'm just going to select earnings. And we'll go to the tax page. And so what we want to do is just set it the way we want it to be. So now it does say, now it does say 2515. So I don't know why the report wasn't showing it properly. So let me cancel this and go back and select both. Okay. It's playing tricks on me. Okay. So what we're going to do here is we're going to tell the system there should not have been any tax, and it calculates the adjustment needed. And then it's saying, well, then we need to give them back this $25. And notice this net adjustment is showing up as a positive 25, and we can't do that. So we need to adjust it back to 0 and set up this payment. So it's a flip side of what we did before. Before we wanted to take away money, this time we want to give the employee money back. And so we need to actually deduct this so that it comes back to 0. And we'll finish it and compute. And I know this is so much information to take in such a short period of time, but it's how they set it up for, a 2-hour seminar, or a webinar, I should say, and just, a lot of information to cover. So this makes it look right. We're going to go ahead and post it. Give it a date. And that will set his record, that will fix his record. So if we go back to the report and we refresh the report, we should see no taxable wages for North Carolina and no withholding for North Carolina. Why we didn't have that withholding showing up in the first place, I don't know, but it was there. So, oh, wait a minute. This is weird. It's still saying that it's there. I don't know. Something's going on with this report. In your documentation, it shows it as it actually, as it was, where there's no taxable North Carolina and there's no withholding. And then again, I'm not going to show you on screen, but when you go to calculate his payroll for the next pay, it's going to remind you that you owe him the $25 and give you the chance to add that to his paycheck. So yeah, I don't know what's going on with that report, but we'll just refresh the data. Maybe it got a little confused. Okay, so we are going to, couple more things before we get into printing W-2s. And we should be finishing up pretty soon. So back to that wage and tax report. We talked about all the other things that you can cross or, verify. And one last thing that I think is maybe not necessary, but just probably a good thing to do. I would say it's necessary, but it might not be, is just verify these various taxable wages against the related reports under payroll reports. So for instance, the federal taxable and withheld should all be verified against the 941 report where are you? 941 report right there. If you run it in the generic format for the year, and that is just the one that says report. And so all these numbers on the 941 report should agree with this section of the wage and tax report. If they don't, you're going to want to investigate and see, what's wrong. And then, go on down the line. There's FUTA, state, SUTA, and local, and those are all found under the same, pretty much the same area of payroll reports. So if we go to payroll reports, wait a minute. You've got your federal, you've got the 941, but you also can, run a FICA report or federal report, your locals, and then you've got your SUTA reports in your state. So I would cross-check those, make sure all the numbers tie, and then you can feel really confident that your W-2s are going to be accurate. And then we have one other report under the W-2 reports that I think was new last year, called the W-2 coded items proofing. And this basically you put in the year, and it shows you everybody who has earnings that should fall into special boxes with special codes. So you just want to look this over, make sure this looks accurate. If not, change those settings wherever they need to be changed, typically on the earn code. But like, for instance, this pension, that might be that deduction fringe code where that box was not checked. So you might need to go back, change that box, or set that box, or enable that checkbox, come back and rerun this, and just make sure that everybody that should have retirement plan checked is checked. And if history adjustments are needed, then make your history adjustments. But all of those things we went over today, your W-2, if you go through all that process, your W-2 should be 100% accurate. And so then, obviously, before printing them, you're going to need forms. So we would recommend that you do a preview, and preview with counts so that you know how many you need to order, and then probably order extra in case printer jams, or, find out after you print the first set that some change needs to be made. We do recommend, and it's in your documentation, I don't know, it's not going to be on the same page that my documentation, but on my documentation, it's around page 58, where it says order forms and envelopes. Dynamic Systems is a partner of ours that we recommend. I've given you their phone number and their website. They will guarantee that the forms will align correctly, but you can get forms from anybody who provides them. You just have to make sure that they line up properly. Before we get into the actual printing, when I show you how to print, I'm also going to show you how to preview the counts. So we're going to do that both at the same time, where in reality you would probably display them on screen, get your counts, order your forms, then go back and print the W-2s. So we're going to do them both in one step to save time. But I do want to talk about the two formats and what's different about them, and then we'll get into it. So we'll do our polls first, then we'll get into it. So there's two formats. They're called 2-ups and 4-ups. The 2-ups are 2 W-2s on one page. The 4-ups are 4 on one page. The 2 on one page are for 2 different people. The 4 on one page is for one person. So if you do the 2-ups, you'll need one set that's your federal, one set that's your state, one set that's your local, and then another set that's a copy for the employee. So you're going to need more forms if you're using 2-ups. The 4-ups, you'll get your federal, state, local, and additional or copy all on one page. And since these forms allow you to fit 2 states and 2 locals, if none of your employees have withholding in more than 2 states or more than 2 locals, you'll just need 1 sheet per employee with the 4-ups. With the 2-ups, you'll need 1 run for each employee if nobody has more than 2 states or 2 locals. Now, just off without me having done this and compared them, the 4-ups seem more economical to me, but I don't know if they cost a lot more than the 2-ups. But they just seem like they're easier to work with. But we give you the option. And for the demonstration, I'm going to show you the 2-ups just because they're a little bit more complicated. I would rather you get instruction on, guidance on the one that's more complicated, and then know that the other one is easier and you can probably do without the demonstration. So before I do that, that's like the grand finale. I'm going to pose our last 3 questions, and just if you're pressed for time, we have 9 more minutes to that 2-hour mark. And if you absolutely have to go, as long as you answer one of these questions and stay to 3 o'clock, or that, you'll get all your credits. So if you have to cut out right at 3 and you've answered a question, you're good. If you can stay on, stay on. So I'm going to go ahead and launch the first of these 3 questions. And again, I'm not going to read them, just going to let you read them and answer. And I've had about 60% voting, so that's what they call it, voting. So when I see 60%, I'll close it out, and I'll give you a warning that I'm about to close it out. Okay, I'm getting ready to close this out in just a few seconds. Oh, I'm getting more people. Okay, I'll hold on. I'll hold on just a little bit. Okay, just 3 more seconds. Looks like we've stopped. Okay, and I will share. And I think most of you got that right. The answer is there are settings on the earn code. So that is where that's where, in every case, the W-2, you're telling W-2 where to put things, except for deduction fringe master. Okay, we're going to hide that one, go on to the next one. These should be really easy. I just said this, so this should be easy peasy. I'm going to give you about 10 more seconds. Okay, I'm going to go ahead and close and share. And the correct answer was 2. And so most of you got that. That's great. Okay, and the very last question. Oh, no, there's 2 more questions. Sorry. Okay. Where do we recommend? Okay. This one I also just mentioned, so hopefully it's an easy one. And actually, I'm not going to launch the last question. We really don't need it. We only needed 6 for 2 hours. If it was a 3-hour webinar, then we would have needed the 9, but it won't do you any good to answer an extra question, so I won't give it to you. and that way we can try to be close to on time. All right, I'm going to go ahead and close this one out because it looks like most of you have gotten it or have answered that they're going to answer. Yep. Okay, and share, and it is dynamic systems. So we're good there. Okay, back to foundation to wrap this up. All right, so one thing is I'm going to go to the print the payroll reports, print W-2 menu. And notice that it says formatted for tax year 2020. That's because the year-end update has not been installed yet or even finished yet. So obviously we don't want to print 2021 W-2s with the 2020 system. So you wanted to make sure that you're updated first. So if you're not a hosted client, get updated before you do this. If you're a hosted client, wait until they update you. But they'll do this all in a timely manner, knowing that that we have deadlines. So make sure you do that. And then since I'm doing this for the well, either way, but just keep in mind I'm explaining this mostly for the 2-ups, but I will tell you what's different if you were running 4-ups. So we're going to start with the federal run. That's all you have to do is click it or select it. And then if you have people working in Maryland or PA, you might need to, select those boxes. I don't know if I showed you this yet, but throughout Foundation, well, we can click the help here, but throughout Foundation, if you're in a report screen and you're not really sure what you're supposed to do, you can always click on help and you'll get something like this to give you way more information and even links to other information that should help you figure out how to answer different questions. So that's throughout Foundation, another self-help tool that you have. So we'll put in the year we want to produce. Of course, I have to say 2020 with this data. And then this is what you would do if you're running this as a preview to find out how many forms you need. You check this checkbox that says display W-2 count by employee. And then this is optional, but there's a summary that you can have appear at the end of, after the W-2s are displayed. I'm going to go ahead and select the both just so you can see what that looks like. And then the next time around, I won't select it. And then here's where you're going to tell the system whether you're using a printer that uses sheets of paper or dot matrix style printer that has a continuous paper. It's default to the individual sheets because that's probably more prevalent. And then also is where you're going to tell it whether you're using 2-ups or 4-ups. If you do choose 4-ups, you also can say whether they're the pressure sealed forms or not. But we're going to choose the 2-up option. Go to next. And then this is just a recap of your settings. If you want to change any of them, you can change them. And then you're going to have a chance to print a alignment. So I would do this after you get your forms, and I would definitely print on the form. And then this box tells you how to adjust left, right, up, down, top or bottom by increments of 100 to get everything aligned properly. So you can keep doing that until you get it just right, and then save those settings on the next screen. So we click next. If we say save settings as default, it'll save all of your settings thus far. And next time when you go to run your state run or you come back to print your W-2s for real, you can have all the settings saved. And so we'll click finish. That gets it ready. And now we display them to the screen. And of course, since we're printing on pre-printed forms, we're not seeing, all the descriptions, but we know this is federal, like you kind of tell by the numbers, Medicare, this is state, these are locals. So you can scroll through, you can print these out on plain paper first, and just, see if you see anything wrong. But then once you're done, if you were actually printing, you're either going to click File, Print to send to a specific printer. If you have the right printer set up as a default, you can click the Print icon. I usually like to do File, Print because that lets you pick the printer, whereas this one is going to send them to wherever it's probably the last place it used, or it might not be the right printer. So that's why I do it that way. And then when you close, this a summary that we opted to see pops up, and you can look at it, print it, or click OK to make it disappear. And then, oh, did I do that? Oh, I know what this is, because I told it to print the W-3 as well. So yeah, you can print the W-3 at the same time that you're printing your W-2s, although you probably wouldn't. And then, maybe you would, I don't know. And then here's the report that you get as a result of saying, show me the count. So this is telling me for federal, I need 12 W-2s if I'm doing 2-ups. Actually, I need 12 W-2s even if I'm doing 4-ups, but at least 12. It's also telling me that I have 2 employees that have more than 2 locals. So I know that I'm going to need more than 12 for the local run, but for sure I need 12 for the federal run and for the 4-ups. So that would complete my federal run. Now we're going to go right back and look at this for the state run. And the reason why I'm going to go through that is because there are slight option differences for state and for local. So I do want you to see what those are. So this time we're going to do the state run. And you have those same options there. But when you get here, you have 2 ways of producing these. So you may, so the multiple states, multiple forms means that 2 states will print on each form. And so like if this employee had 4 states, they would need 2 W-2s for, they would need 2 W-2s to accommodate all their states. Or you can choose this option of 1 state on 1 form, and if you choose that option, you're going to have a separate run for each state that you have wages in. So we would run this 3 times. It would only produce the W-2s pertaining to Michigan, next time North Carolina. So it's really, I don't know what's the better option. It's just an option. And then if you do choose the 1 state on 1 form, you can use the available box to show the total for the rest of the states, which I would probably do. But we're going to just use the first option, and that's for 2-ups. Now, if you have 4-ups, you're probably going to enable this box, because for 4-ups, you've already got everything you need on the federal run, unless you have employees that have 2 or more states. Then you would need some additional W-2s for just those employees that have multiple states. And so if I was doing 4-ups, I would enable this box, and instead of rerunning a whole run that I don't need, it's only going to run the few that I need, or however many I need. But since we're doing 2-ups, we'll leave it like that. And same year, and I still want to get my counts, because I'm pretending now that I'm doing a preview. So I want to know exactly how many I need. And I don't want the summary this time, because you guys already saw it. None of this changes, and that's just my recap. None of this changes. And then once again, we display them to the screen and print them if we're printing, and then close out. And then when we close out, it tells us that we need 12 for state. So if we're counting so far for the 2-ups, so far we need 24, 12 for federal, 12 for state. For the 4-ups, we still only need 12. But we know that's going to change when we do our locals. And now we'll run through that. Only minor option changes for the local. Also note that you can run these for territories, I should say. This doesn't change. Now it gets way more complicated on this screen. So multiple localities, multiple forms means 2 cities per W-2 for the same person. They have 10 cities, they need 5 W-2s. And then for all of these options, you have the option of reporting local residents' wages if that's something you need to do. 1 locality, 1 form. means you're going to just print one city at a time. So if you had work in all of these cities, you'd be doing this, 20 times to produce all your different localities. And then you also still have that option to use the free box to show the total for all the other localities. And then one extra option you have on the local is to choose an agency. So I know that in Cleveland, there's two agencies that collect local taxes. Like the local tax is big in Cleveland, and so there's a RETA and there's a CCA. So you could actually run this, by the RETA agency. You'd have to have them set up in the first place. I don't have any set up, but you'd have to have them set up, and then you could run all your W-2s for RETA, and then come back and run all your W-2s for the CCA cities, which would be really convenient for your employees because then it's already separated out for them accordingly. So if I was a Cleveland employer, I would probably choose that option. And then the other option here is if we choose multiple localities. If you're using 4-ups, you would want to check this checkbox so that you're only getting those additional W-2s that you need, not all 12 of them all over again that you don't need. And then here, get our counts. I don't want the display. That doesn't change. That doesn't change. And then we display these. And in your documentation, I didn't stop to show you on the screen, but in your documentation on the federal and the state runs, the local wages were reported for a couple of these employees as many and just condensed because they had more than two. But on the local run, that's where they get detailed out. This Brian Schwartz had a couple different cities, and so did Brady Thompson. So, like I said, on the state and federal, this just said many. That way, for each entity, they get what they need. And then again, you would print these, close, and then this tells me that I need 14 for the local run. So if I'm doing 2-ups, I need 12, 12, 14, and 14, or a total of 52 forms to accommodate all the runs. If I'm doing 4-ups, I only need 14. So 12 will accommodate everybody for federal and state, and then I need 2 more to accommodate the 2 employees that have extra cities. So it's really simple once you go through it. Every year I always kind of freak out about it because I don't remember how to do this. And then once I get back into it, then I realize it's not that complicated. And you can rerun them as many times as you need to if there's mistakes or they jam up or whatever the case might be. All right, so I am just going to show you a couple final things and then we'll call it quits. But any of you that need to go, that answered your 6 questions, you're free to go now and still get your full credit. I'm going to see how these numbers, if they go down rapidly or not, but it's just a few more minutes if you want to hang in there. So print the W-3, you could have done it along with when we printed W-2s. You had that option to do it at the same time. To do it separately, just put in the year. There's some other criteria here that may pertain to you, and you get your form that goes with the federal, that you turn in with the federal run. We do give you the option to open up these fields and manually adjust them, but we also warn you that the totals must match your W-2. So I don't even have a good example of why you would need to do it, but just know that you can if you need to. Maybe it's for a small company where you only have a couple W-2s and you're going to do it all manually. I don't know. But that's all there is to that. And then I'm just going to run real quick through the electronic filing for any of you that might have to do electronic filing. So under print W-2s, all the way at the bottom, there's magnetic, electronic. And I don't even know how you have to do it if you have to do separate runs, but it says here that instructions can be found at www.socialsecurity.gov that tell you how to produce this, how to submit it. and it tells you that the file has to be a .txt file. It also tells you that you have to transmit using this business services online. So I don't know what that means either, but I'm assuming if you need to do it, you know. So you put in your year, and you have to tell it where you're going to save this file. I have saved this multiple times now, so it's going to give me that message that it already exists. But make sure that it has the TXT extension, and then go to the next screen. Yes, it already exists. Apparently, you need a PIN number that's 8 digits long, and you want to make sure your address information is correct, hasn't changed. If it has, change it. They want to know who they're dealing with and how they can reach the person that's submitting this. So I'm going to give them a fake email address. Oh, good enough. And we'll keep going, answer that question, keep going, and prepare it. And then you can display the report on the screen so you see what it looks like in a normal format. And then to turn it into a text format, you click the post button. And then you'll follow the instructions. Most likely there's a website where you have to click on a button to upload the file, and then you'll point to where you saved that file and upload it. And in your documentation, there's a picture of what the text file looks like once it's saved. So that should be what's required for that. So that's pretty much it. Just again, remind you that you have this document. You are able to log a call the 1-800 number for help, go on our website to get more resources. Know that the support staff is all geared up for year-end type questions, and they take classes on it, so they're the most up to date on all these things. So they're going to give you the quickest and best answer. And there's links in your documentation shows you how to access all of this stuff. So that's it. I thank you for your time, and thank you for hanging in there a little bit past time. And I hope you have a great rest of the week and a great holiday. Thank you very much.